8 Reasons People Are Staying Away from Cryptocurrencies. Welcome to our YouTube channel. Please subscribe for informative and entertaining content. If you would like to be notified every time we post a new video, kindly turn on our post notification. Today, we are discussing cryptocurrencies and the reasons people stay away from them. We have lined up 8 reasons people are staying away from cryptocurrency. The world since 2009 has been paying full attention to cryptocurrency and how it continues to evolve. There are speculations of the government being scared about the future of fiat currency. The question has always been whether or not people see a lot with cryptocurrency and the trust they have with an online system being enough to invest money they might not be willing to lose. I heard a funny story from Lagos where a woman believed that when a bank messes with her money, she can go and make noise at the banking hall. But if cryptocurrency drops like the recent 40% in Naira equivalents, can only be angry at her laptop. The stakes are high for a chance to have a decentralized ledger for money transactions, but this will not come without a bit of distrust. The government's backing in real currency means absolute power, but at least there is a ray of hope that if anything happens, the fall shall be taken by the government and they will pay everyone back. This safety net is not an option in cryptocurrency. People who stay away from cryptocurrency are many, but we shall look at 8 of them and examine their strongest arguments under each. It is not fair to not give the doubters a chance to express what their biggest fears are. Let us look at the factors now. Number 1. No government backing. The lack of government involvement is the selling point of cryptocurrency. In 2016, the government of India, by way of controlling inflation and what it termed as black money, 86% of its banknotes that were still in circulation were demonetized overnight. This logic means that anyone who had 500 and 1,000 banknotes was immediately rendered moneyless. In a cryptocurrency economy, this will not happen because no one is the authority on the value of money. This same logic may also be the fall of it for most people because, without government backing, a currency's value relies solely on whether people want it or not. This thought may not seem so bad until you realize that this currency is only an alternative currency. All forms of money approved by the state are encouraged over digital currencies. If a bank collapses, the government owes the people because the government regulates banks, and it is their fault for not being proactive and making them stay in business. If your digital currency crashes, you have yourself and your CPU to blame for it, along with all your expenses in mining the cryptocurrency. Government backing seems to be one of the downsides of cryptocurrency now. Number 2. No known value. The intrinsic value of the digital currency is how much people are willing to pay for it. This position may be the same in art, gold, and other minerals, but these traditional investments have a start-off point that they do not seem to cross. The stock market will not see the price of gold drop by 40%, as seen with cryptocurrency. The value of fiat is whatever the government says it is, but not with cryptocurrency. You have to wait for consensus from every person ever involved in the transaction ledger to decide how much of a series of numbers and letters cost. This point has been another concern of many people. Number 3. Security issues. There are statistics to prove that there are cryptocurrency frauds to the tune of $2 billion annually. The target of online fraud has been shifted to the digital currency world. So cryptocurrencies are numbers and letters mixed, representing the amount of money one has, no names of people. The only way to keep it safe is by keeping your key secure. Once hackers manage to get a hold of your key, they become the new owner of your account and all your money. This situation has touched many people who are not well vested in programming. There's also the point of withdrawing your cryptocurrency through an agency. This action is safe until the agency's records are hacked and all the keys of their customers are exposed to fraud. The fact that hackers have a way to steal your money and there can be no legal way to address the issue, like if you had dealt with a bank, is a scare for many people. Number 4. Lack of understanding. The knowledge of how blockchain technology works may be missing on non-programmers. The fact that you are investing in something you do not understand in plain language. The mining process and the rise and fall of the currency is not something that the layman who is behind in tech will understand. The situation will mean that it will only be a field for programmers, and the only people who programmers may convince will be those who have a general interest in tech. A gap in the understanding of cryptocurrency is a cause for many staying away from it. Number 5. Not a productive asset. If you invest in real estate, you are guaranteed an inevitable return. The same can be said for buying a share and becoming a shareholder in the business. You shall stay a beneficiary of the success of the company. In cryptocurrency, There is no form of productivity happening where it is being used by someone else or being invested in other businesses. It is just sitting on a ledger, and you are hoping more coins are mined and sold so that yours will also be eligible for a higher chance at a sale. Therefore, this form of investment is not a productive asset, and investors will first look at other options. Number 6. No clear future adoption. The government is still very threatened by the economic impact of cryptocurrencies, and with all of the security issues raised, it doesn't seem like governments will adopt it anytime soon. Some banks are preventing customers from buying cryptocurrency with their credit cards, and that is a way to discourage people from venturing into the digital currency space. Since its inception in 2009, cryptocurrency is still not used by at least 10% of the world population. There is an internet gap where about 64% of the world do not have access to the internet or cannot use it effectively. That alone shows that online money is a long way from materializing as mainstream. There are colleges accepting cryptocurrency as tuition fee and the rest, but it is still very few. Number 7. Highly speculative. People should not invest their life savings in cryptocurrency. This statement is from Elon Musk, who recently bought $1.5 billion for his company, Tesla. The earnings and relevance of the whole digital currency movement rely on speculation that it might get better and cost much more in the future. No concrete facts are pointing to this. It is highly a speculative industry at this point. Number 8. Interests are unstable. The interest rates of cryptocurrency have no proper stability. This currency fluctuates between how much new miners are willing to accept for their coins. This instability is not ideal for an investor who has invested in other avenues where there are stable rates of return. A currency that can lose its value very fast is a high-risk investment, and many people will have it as a reason to stay away from it. All assets are bound to a level of risk, but if the business survives long-term, one should not be at the mercy of fluctuations. The arguments for and against cryptocurrency all sound convincing and thoroughly investigated. You can tell us in the comment section if you agree with these points raised on reservations about cryptocurrency. If you can put these reservations into perspective to get people interested in cryptocurrency, that is appreciated. Finally, tell us your experience with cryptocurrency and whether or not you will make new investments, or you have already. Kindly give this video a thumbs up if you enjoyed it, and don't forget to subscribe if you haven't.